What's up, moneymakers? In today's video, we are covering the hottest updates for NIO stock the past few days, as well as doing a deep dive into the Q3 earnings report at the very end. So give me exactly what we're covering. Number 1, NIO stock updates including the Q3 report. Number 2, the most important highlights from the Q3 earnings call that may make or break your decision to invest in NIO. And number 3, what am I going to be doing with all this information? If you're new here, welcome to the Moneymakers family. Make sure to smash that subscribe button and ring the notification bell to get the latest and greatest, at least 2 videos every single week. And while you're down there, why don't you give us an early thumbs up and turn that like button into a beautiful, beautiful blue. If you want to get up to 4 free stocks valued at $1,600 each and support the channel, sign up for Webull down below, a new brokerage platform. Now let's cover one big update for NIO before we jump into the Q3 earnings report. The past few days, we've seen a lot of hedge funds actually add NIO stock into their holdings portfolio, including Bridgewater Associates, James Simon, and most notably, the largest public pension in the United States by assets. And this is the California Public Employees Retirement System, or CalPERS. CalPERS manages almost $400 billion in assets, and they essentially purchase shares in Q3 in Nikola, NIO, Zoom, as well as Tesla. And this is a huge deal because pension funds usually need to be very carefully managed to ensure that their retirees that are part of this pension program actually receive their retirement benefits. So it's very interesting to see that a pension fund actually invested in a couple of really high growth stocks. However, you do want to keep this in mind because they did invest in Nikola, which we all know is pretty much a fraud company. Now, before we dive into the Q3 report, leave a comment down below. What is your cost basis for NIO? Mine is around $12.28, and I'd love to see who has the lowest cost basis because you are getting a shout out in the upcoming NIO video. At a high level, NIO beat analyst estimates and gave a strong guidance for Q4, but make sure to stay for each point because we're going to be pulling extremely insightful information for each of them. Plus one line item from their Q3 earnings that I'm personally a little bit concerned about. Firstly, I want to focus on their total revenue, which raked in $666.6 million in Q3 of 2020, which represents a massive 146% growth from the third quarter of 2019. Now, if we actually break down his total revenue, we can see that vehicle sales covers around $628 million worth, and then the remaining is coming from other sales. And other sales would be comprised of battery chargers, subscriptions, etc. I'm personally expecting this to go up as more cars get sold later on. However, I do expect this to grow at a slower pace compared to their vehicle sales because a major component of their home chargers wouldn't be too popular in China because in very large cities, most people live in apartment buildings and they won't really need stuff like home charging. Rather, they'll be focused on battery as a service as well as battery replacement / subscription services. And speaking of vehicle sales, their vehicle margin, which means how much they profit per vehicle sold, it was actually 14.5% in the third quarter of 2020. This is compared to a negative 6.8% in the third quarter of 2019. This turnaround in only 1 year is actually a pretty massive deal. And they specifically highlighted that these further improvements in margins were coming from increase in efficiency and not really supplier discounts. In fact, they specifically mentioned that their margins will remain relatively consistent in Q4, but they are confident they will improve their margins as they continue to scale their products. Where make sure to stay for the next section on the Q3 earnings call, where I specifically highlight one thing that they're going to be able to scale very quickly. Now, in terms of actual vehicle deliveries in Q3 of 2020, they were delivered around 12,206 vehicles compared to 10,331 vehicles in Q2 of 2020, which represents around 18% growth. It's actually a pretty solid number, and in fact, in Q4 of 2020, they expect to deliver around 16,500 to 17,000 vehicles, which would bring them to a total of around 43,000 vehicles at the end of 2020 on the higher end of the optimism spectrum. And according to their CEO, they're expecting to continue to improve their manufacturing capability to increase annual production to around 150,000 vehicles in 2021. Which is a 65% increase in vehicle deliveries, assuming they deliver each single vehicle. In fact, analysts are expecting sales to reach 100,000 units next year. And this is primarily driven because China's new energy sales are accelerating in 2020 after the coronavirus continues to shake off. Now, as far as losses go, there has been improvements and the path to profitability is becoming more and more evident. I won't dive into each one of these, but loss from operations decreased 60.7% from third quarter of 2019, and net loss decreased 58.5% from the third quarter of 2019, which leads to a gross margin of 12.9% in Q3 of 2020, which remember, it was negative in Q3 of 2019. Now, before we dive into the concerns I personally have with the earnings report, I do want to look into their current ratio, which is essentially how liquid are they to pay off any short-term obligations such as debt. And if we dive into their balance sheet, we can see their total current assets is hovering $3.8 billion with a total current liabilities of $1.6 billion. This gives us a current ratio of 2.4, which is honestly a pretty solid current ratio. Now, the concern I had on the Q3 report is the expense they had on the research and development aspect, which clocked in around $87 million this Q3 of 2020. Although this is a slight increase of 8.4% from Q2 of 2020, it is a decrease of 42.3% from Q3 of 2019. And my concern is, are they investing enough in research and development to really take the world by storm? And specifically, I'm comparing this to another Chinese manufacturer called XPeng, who has 40% of their employees focused on research and development because that is their core focus and principle. And this is highlighted from some of their pretty nifty technologies, such as their P7, one of their vehicles, has the longest range in China. Plus, their X-Pilot 3 is going to have the highest level of autonomous driving capabilities. And if you want to learn more about XPeng, check out my stock analysis video over here. Now, if NIO truly wants to dominate XPeng in terms of technological advancements, perhaps they want to start investing a little bit more into R&D. However, looking through the report, they did state that the decrease in research and development expenses over the third quarter was primarily attributed to the higher design and development costs incurred in the third quarter of 2019. And the company's overall cost-saving efforts and improved efficiency in R&D has remained relatively stable since 2019, which mainly consists of costs incurred for recurring projects. So I do expect this to increase a little bit more as they start working on their in-house chip solution. Now, in terms of their future guidance, like we mentioned, deliberate vehicles, we already covered this, but the total revenue is expected to increase 119.7% to 126.0%. Now let's get into some of the very important highlights from the earnings call, which was extremely long, by the way, guys, that may make or break your decision when you decide to invest in NIO. And make sure you stay until the end to find out what exactly I'm doing with all of this information. Now, broken up by categories, they're expecting to release 2 sedan models. One is to be announced in Q1 of 2021, where it's going to be leveraging its autonomous vehicle platform. Secondly, there is a 35% uptake among recent orders for the battery as a service, which will not impact vehicle margins. Battery as a service will generate service revenue over time, so this is kind of what we were talking about when we broke down the total revenue into other services versus vehicle sales. Next, the 100 kilowatt hour battery pack that we mentioned will not launch until December, so will not significantly impact Q4 revenue. Next, in the upcoming shareholder event, NIO will update on their autonomous vehicle platform that they have been working very hard on. Now, in terms of Europe expansion, there haven't been any major unknown updates on the call, but they're still planning for the second half of 2021. Now, something that's really interesting is their new user volunteer initiative that really speaks about the brand image and the brand power within China. NIO users essentially are promoting NIO within the community. And as of November 10th, across 118 cities, they had around 3,000 volunteers be part of this volunteer initiative. And finally, in terms of production, they are striving to improve supply chains to increase its production capacity. And by January of 2021, they're targeting the ability to produce 7,500 units per month. So now let's get into exactly what will I be doing with all this information. Ultimately, from the Q3 earnings report, we learned that NIO has greatly benefited from its improved cost controls, from its scalability, as well as its efficiency. This led to a consecutive second quarter of positive cash flow and ultimately a pretty solid foundation of future sustainable growth and technological investments. Now, in terms of how NIO will react in the next few days, it's pretty unknown. However, if we check out the historical earnings report, even when they were positive, we've seen NIO stock drop by just a little bit and it starts to recover over time. So the last 2 earnings report was positive, and that's exactly what we saw. Now, in terms of the actual price right now, I'm recording this before the market open, and what we're seeing right now is that the price has a little bit been hovering pretty steadily. It's about around a 2% decrease. However, in the grand scheme of things, it's pretty stable, I'd say. I think in the short term, it's going to drop a little bit, just like historically we've seen, and right now we've actually seen it go down a little bit after hours. However, in the long term, I expect NIO stock to go up. And if it does go down right now, well, that is a dip, and that is a fantastic buying opportunity for people like us in the Moneymakers family. Speaking of long term, make sure to check out my November stock picks over here, which by the way have all been growing very much in November, as well as check out my XPeng stock analysis video over here.